The broadcast is now starting. All attendees are in listen-only mode.
Hello, this is Jennifer Schaus, and welcome to our Government Contracting Webinar Series. We are in week 8 of 10 weeks of government contracting webinars. Thanks for joining us, and thanks to Sanjay Bhaskar for joining us today as well, who's going to be discussing best practices for government contractors finance. And the full list of our webinars is on our website under the webinar section. You can find those listed there by date for the upcoming 2 weeks, and then below that, all of the recordings. A little bit about us. We're based in downtown DC, providing a variety of services for government contractors ranging from 8A certification, contract compliance, proposal writing, GSA schedules, and other services. We do host events and seminars throughout the year. You can find those on our website under the events section, or simply sign up for our newsletter, which now reaches about 11,000 government contractors. And that'll keep you abreast of the upcoming events that we've got. This slide here touches on a little bit about me and my background, but more importantly, I'd rather talk about Sanjay, and he'll share some great information with you guys. So Sanjay, thanks again for joining us. I'm going to turn the floor over to you now.
Thank you, Jennifer. I appreciate it. This is Sanjay Bhaskar with StreetShares, Director of Business Development. I have over 20 years of experience in finance and lending. We are located in Northern Virginia in Reston, and we provide full scope financing solutions for small businesses and government contractors nationwide. And you'll see a little bit about what StreetShares does. We do small business lending, mobilization funding, and contract financing. And we do it in a pure lending, crowd lending type of way, and we can touch on that a little bit. But I really wanted to today touch on some of the challenges that government contractors face in their growth, in their financing, review solutions, kind of full-scale solutions from traditional financial institutions all the way to factoring that are available for government contractors. And lastly, just kind of touch on things you should do when you're in your pre-award state versus winning an award, and then the types of things you can do to help kind of smooth out the cash flow and challenges you might face in your business going forward as you're working on the contract. So first of all, we have here contractor challenges, and some of the folks listening may have heard of these or run into these before. So uncertainty of award dates and timelines, and that's something that we are seeing now as we're in contracting and award season, where you do a lot of work, you're bidding on different contracts, different awards, and you're really not sure exactly what day that might be awarded to you. But you have to be prepared, because your awardee, your agency could call you up, or your contracting officer say, hey, you've been given this award, and we get the official signed copy, and work needs to begin a certain number of days out. So you have to be kind of ready to go. So that also causes stress for folks to say, okay, well, if this happens tomorrow, will I be ready, and will I be able to ramp up operations once I get the award? One of the biggest challenges that people face in a new award is the lag time between beginning work and receiving their first payment. So you may start work on a project right away, start adding employees, materials, equipment, other costs, operational costs to working on the contract, but you might be 90 or 120 or even 150 days out before you'll see your first payment from your prime or from your agency or from the government. So those kinds of ongoing payroll, equipment, operational needs are something that needs to be addressed. And then, the other thing that can happen if you start your invoicing processes, there could be delays in payments. So we hear that quite often, where somebody says, well, I was expecting this payment last week, it hasn't come in yet. I am in contact with my contracting officer, and they assure me everything looks good, but there could be delays on their side that they just can't control. And I know with a lot of prime, sometimes people might say, well, when we get paid, our subs get paid. So there's different things that could happen in that process that could cause delays in payment. And if you're a growing or a thriving contractor, those delays can really hurt your business, because you're required to have the capital on hand at that point to continue payroll and operations. So now we'll touch on kind of the options that are out there, the good, the bad. So you'll see, number one there is traditional financial institutions, banks, credit unions, other folks. And they're really great in terms of cost of funds. You can certainly get large amounts of money from a bank or financial institution, large lines of credit, potentially, if that's what you need. The downside or the bad with the banks and credit unions is the approval process can be very long. A lot of banks offer SBA lending, but an SBA process can take up to 90 days or longer, and you still may not get approved. So hence you see the low approval rate. So there is opportunity where you're going through that process and you think everything that you'll need, and you still may not get approved, whether it's the cash flow of your business, the age of your business. There could be a variety of reasons, credit, that you would not be approved. And then the other thing with banks and financial institutions, even though they will work based on you being a government contractor, they're still looking for traditional asset-backed lending. So where you would have to pledge your home or other assets to that loan to ensure you're able to get that money and move forward with your needs. And that has created, obviously, a universe for alternative or marketplace online lenders. And, you know, the upside to those, and StreetShares is considered one of those in a lot of ways. Speed of funding, you can certainly get money quickly. You can apply, in StreetShares, for example, we could do loans in as 24 hours, as a lot of other alternative lenders can. A lot of times it's easy to apply and get approved, so the process can be done online very quickly, and the approval rates tend to be a little bit higher than financial institutions. The bad of that is lower amounts. You might not get the amount that you're looking for. Depending on who you're dealing with, you could run into predatory practices and also deal with higher rates. And you really need to be careful, and you need to vet the people that you talk to. If you are given an offer, please understand your offer. There's a whole host of tools available for you online to calculate interest rates, APRs. I urge everybody, if you do go that route and you're unclear about what you're paying in a loan, please go online, you know, on StreetShares or there's other bank rates, people that have calculators for amortizing rates. You know, to give you an example, I've dealt with a lender here who was in this situation where they were going to be short of payroll, and it was a veteran-owned government contractor that had a delay in their payments. I believe it was on a Wednesday. They contacted us with payroll due Monday, and they hadn't received their invoice yet, so they were kind of in panic mode. So we were able to get them the money needed to cover payroll that Monday. The invoice didn't come in for 2 more weeks, but because, you know, we're able to move quickly and kind of get that situation mobilized for them, kind of took that issue away. And then the third thing is factoring, which I'm sure many folks have heard of. Factoring is interesting because it is very contract focused, specific to a contract. So that's basically saying, if I have an invoice on a particular contract, I want to sell it to a company, they'll advance me some of the money today. And it can be a very useful tool in the right situation for a business that's growing, that may not have the credit standard, that may not have the cash flow of getting lending in other places. The downside of that is it can be very expensive. The terms, as I mentioned again, can be very confusing. So always ask a lot of questions, study the contract, make sure you understand the real cost of your funds. And again, that leads to predatory practices as well, where people will try to take advantage of a contractor or a business owner, thinking that they're in a very tough situation where they can't get financing elsewhere. Factoring as a tool can be very effective if used in the right situation, if you work with the right firms. And again, if you have any questions on these after, you can certainly reach out to me. And so then we'll go to the last slide here. I just want to kind of talk about the spectrum of contractor needs and kind of what you should look at before award, before you begin your invoicing, and then after your invoicing, and that's more towards the factoring side. But typically before your award, you want to always try to get a financial capability letter, and that just simply states that you have somebody that will back you up in case you win the award and supply the financing for you. Scope your funding needs. How many folks will you need to hire? What equipment will you need to purchase? How much of that cash do you already have on hand? How much will you need to bring in if you win the award? And obtain pre-approvals. A lot of folks, as I mentioned in that case I just told you, they will decide, you know, at the last second, hey, I don't have enough money to get this. Now I need to find somewhere to get these funds. So always try to get your pre-approvals lined up ahead of time before your award. So, you know, once the award is given, you can move forward and operate fairly quickly on that contract. After award, really one of the big things is mobilizing to buy people parts. It's a flexible option. And that's really that lag time that I mentioned earlier of I'm starting work on the contract, so I'm accruing payroll, I'm accruing equipment cost, I'm accruing operational costs. but I might still be a ways away from actually receiving payment. So how do I mobilize that process and use the fact that I have a contract in hand to get funding to do these things and keep my business moving forward, and I don't run into any roadblocks with not being able to pay salaries or to purchase equipment, things like that. And then the after invoicing part, so that's where things can change. So you then do have an opportunity for cash flow coming in. So in a factoring scenario, you could receive some of that money up front, or you could get a comfort level to your financial institution that, yes, I have invoiced and I expect this money to be coming in. So there's different things that you need to kind of prepare for through each stage of your financing. Jennifer, that's what I have. If there's any questions, but my contact information is right there. This is my email, very simple to reach us. On my email, you can come to streetshares.com, check us out, and reach out with any questions. Happy to answer anything along any of the subjects that we covered. If you just have a question, even if you want to run a scenario by where you're looking at financing and you just want a second opinion, we're happy to do that for you as well.
Great information, Sanjay. Thanks so much for joining us today, and thanks everybody who dialed in as well. Tomorrow and the rest of this week, we are covering GDPR, which is the EU's data privacy regulations for government contractors. Very important topic. Friday, we dig into the management section of the proposal. And then the final 2 weeks in this series, which will be week 9 and week 10, we're going to be discussing GSA schedules in more detail, 8A certification, and sole source contracts. You can find the full schedule on our website. All of the recordings are also listed there under the webinar section. Thanks again, Sanjay, and thanks again, everybody who joined us today.
Thank you, Jennifer.